taxation system in Canada and most industrialized countries is very rules-based. This means that there are a number of rules in the system that may or may not make sense. There's not necessarily a logical way to understand some of the rules. You just have to know them. An example would be the difference between a deduction and a credit, which we will cover in this video. Knowing whether something is a deduction or a credit, there is not necessarily a reason for it. If you want to determine, you just have to look it up in a list. So in this course, we'll look it up in the textbook. In reality, you would go on to the CRA website, Canada Revenue Agency. After a time, you'll get to know what are deductions, what are credits, but in the meantime, you just have to look it up. So we start by determining total income. These are all of our adds or pluses. So I just add in anything that would be considered income. Most common types that we'll see: employment income, net business income. For this course, this will be a given. You'll see investment income. Regular investment income you take as is, but dividends you gross up by 38%, or you multiply them by 1.38. Taxable capital gains. You take capital gains and you use half of them or multiply them by 50%. Then we calculate net income. So if step 1 is all of the adds, step 2 is all of the subtractions. So we take a look at all of the deductions, anything that we are going to deduct from net income. So things like an RSP contribution, dues, childcare, and other items. How do you know if it's a deduction? Because there's many items that might be deductions, they might be credits, and they might be neither. Again, you look it up in the list. Step 3 might include adds or subtracts. After step 1, we're left with total income. Step 2 gives us net income. Step 3, there may be no difference. So after step 3, you have taxable income, and you may find that net income and taxable income are the same. They may not be the same, but they may be the same. So just because you don't see anything that would change between net income and taxable income doesn't mean you've done something wrong. This is both true for the course and in real life. You will often find that there is no difference between the two. You'll often find that there is a difference between the two. So this is where your other items come in. This is where your other items come in. So you see some examples there on your screen. So the first 3 steps, the math is pretty straightforward. It's mostly addition and subtraction with a little bit of multiplication in the first step as noted. Step 4 is where it gets just slightly more complex. My taxable income from step 3 is what I use to calculate my federal taxes owing in step 4. So whatever I calculate in step 3, this is now the number that I need to calculate taxes owing in step 4. My marginal tax rate is the amount that's paid on my next dollar of taxable income. And this is significant if you're considering taking more work. How much of it do you actually get to keep? But when it comes to calculating my taxes, only the portion that is in a particular bracket is multiplied by that bracket. So as of 2019, here are the federal tax brackets. Of significant note, so if I earned $50,000, only the portion that's above $47,630 will be taxable at the higher rate of 20.5%, not the entire amount. So common error is just to say they're earning $50,000, so 50,000 times 20.5%. No, that's incorrect. These are just federal tax brackets. You will add on provincial to them as well. So as an example, if you earned $49,069 of taxable income, the first $47,630 is calculated at 15%. So $47,630 times 15%. The difference, the portion that's over $47,630 is $1,439, and that would be multiplied by 20.5%. And then those two numbers are added together and you get $7,440. And we are done step 4. Step 5, we calculate the net federal tax. So step 4 is the tax we would have paid if we didn't have any credits. So step 5, we start off with credits. Again, how do you know if something's a deduction or a credit? You look it up on the list. On the next slide, I'll show you some common credits. All tax credits are multiplied by 15%. When I say all, there are numerous exceptions, most of which we will not deal with in this course. We will just assume that all tax credits are multiplied by 15%. I should further clarify, tax credit amounts are multiplied by 15%. In reality, there are two different terms we use to refer to the same thing, or we use the same term to refer to two different things. A tax credit amount is the larger number that you multiply by 15% to get the tax credit. The tax credit is subtracted directly off of your taxes. The tax credit amount is the big number, the tax credit is the small number. In practice, you'll hear people say tax credit to refer to both numbers. We'll be dealing primarily with non-refundable tax credits. Refundable tax credits are a separate thing. Once you have subtracted off your tax credits from your federal taxes payable, you get net federal tax. But you're not done yet. There's one final step. You have to compare that to the tax that you paid that came off of your paycheck. So the tax that came off your paycheck is how much you actually paid. Your net federal tax is how much you should have paid. And the difference is any refund you're owed or balance that you owe to the government. So common tax credits, and again, several of these, there are exceptions. We will just treat them all as 15%. We will take 15% of the amount. We will cover medical expenses separately. Basic personal amount is an amount that everyone gets. An employment amount is the amount that everyone working gets. And these numbers change every year. The brackets change every single year as well. Age amount, everyone over 65 under a certain income gets. Spousal, you only get if your spouse's income is under a certain amount. Dividend, you get it if you earn dividends. Everyone contributes to CPP and EI if you're employed, and you get a credit for that. Tuition, as a student, this would be something that's of interest to you, tuition and interest on student loans. And if you can't use it, you can transfer it to a spouse, or you can carry it forward to use in the future. Medical expenses, only over a certain amount, and donations that you make to a